Hi everybody, it's that time of day that we call Talking Numbers, and today the numbers are really pointing to rising M&A down the track as we go in search of potential buyout candidates. Well, first, lawyers, of course, are on the move. You can bet your bottom dollar they'll be there. CBC.com senior editor John Carney today reporting that, quote, a recent raid by one big New York law firm of a team of top acquisition finance lawyers from a rival firm may foreshadow a mergers and acquisitions boom. Well, also a recent report by Credit Suisse analysts points to the rising cash dash among corporates, saying cash and short-term investments as a percentage of assets and market cap, they're at their highest level among large corporations in the past 20 years. And they go on to say that the period of easy margin expansion associated with the early part of a market recovery is over. That means companies need to look at more creative ways to increase their revenue, and M&A is certainly one option that they should be looking at. So which companies could be potential targets? Well, joining us now with the lowdown, we have Pankaj Patel. He is head of quantitative strategy research at Credit Suisse. Pankaj, great to have you with us. Now, we just mentioned some of the things that you're seeing that are pointing to more M&A ahead. Can you give us a little bit more detail and just explain your thesis for us?
Hi, Mandy. Thanks for having me on a call. Yes. Like in general, we have seen increase in buyout activity in first 7 months of 2010. And in specific, there is an increase in buyout activity for companies which are looking for outside their industry. And the reason for that, as you pointed out earlier, that the profit levels are at the highest level and the cash levels are at the highest level also. So companies want to create their, maintain their profits, and to maintain their profits, they want to use their cash, which is earning almost 0% interest right now.
Yeah, so that's absolutely the case. So what kind of shift in M&A activity are we seeing right now, and what would be the drivers of that shift that we're currently seeing?
The most of the biggest shift we have seen in currently right now, this time around, is companies trying to buy other companies which are not in their industries. And what they are looking for is they are looking for companies with high levels of market share in whatever industry they are in. They are also looking for a cheaper company, and also they want to make sure these companies do not need a lot of capex. So,
how can investors and portfolio managers benefit from this trend?
The portfolio managers and investors can benefit from this trend by finding those kind of companies. So they should be looking at companies with higher revenue growth, higher profit increases in those companies, and also they should be looking for bigger margin expansion for those companies. And these companies will be likely candidates for the acquisition by other bigger companies.
Okay, which companies in particular would fit that criteria? Give us some names here, potential acquisition targets.
Like on that note, we do not talk about individual companies. We have a list of 30 companies from different sectors, and we would highlight those right now.
Okay, thank you very much for joining us, Pankaj.